And Infosys handed in rather mixed set of numbers for fourth quarter. Profit came in at 7,033 crore, higher than analyst expectations. However, revenue missed analyst expectations at about 40,925 crore rupees. Margin also contracted in the quarter gone by. Going forward, Tech Major has guided for flat to up to 3% growth in revenue in constant currency terms in FY26. Infy has also forecast operating margin of 20 to 22% in this fiscal. My colleague Ansh is joining with more numbers.
Well, Infosys has posted a mixed set of numbers with pressure on revenue, especially. In constant currency terms, revenue has declined by 3.5% on sequential basis, a big drop than expected, which was just 1%. Dollar revenue came in at $4,730 million, which is down by 4.2%. In rupee terms, revenue stood at 40,925 crore, which is also down by 2% sequentially. However, profit surprised on the upside. Net profit marked a 3.3% growth sequentially, whereas if we talk about operating performance, then that was steady because EBIT margin came in at 20.95%, slightly lower than last quarter, but above street expectations. Large deal wins remained strong at $2.6 billion, which is up slightly than previous quarter. Whereas if we talk about guidance for FY26, then revenue growth forecast given is just 0 to 3% in constant currency, which is below the street's estimate of 2 to 5%. Whereas the operating margin guidance is maintained at 20 to 22%. So in short, weak revenue, steady margins, strong deal wins, but cautious revenue guidance may keep investors on edge.
And we have also experts joining in Sandeep Agarwal, fund manager, Willow Investment Managers. Sandeep, a very good evening to you. First of all, let's begin by talking about the expectations, guidance 0 to 3% for FY26 and missing estimates, Infosys. How do you see this particular missing of revenue guidance and overall the guidance as well?
Yeah, hi, good evening, and thanks for having me on the show. So, in this kind of uncertain times, this kind of misses can happen, and this Infosys by nature has a higher discretionary spend, so the miss is not surprising to me at all. IT is a very typical business where 80% is 80% of the business is annuity, which cannot be touched in worst of environment, while 20 is extremely discretionary. You have to every year get new orders to build that. And that 20% is on the last priority of the client, and 80% is on the top priority. So the challenge is always this growth. So I think in this uncertain times, clients will obviously not take any decision on that 20%, but 80% will have no issues. But the point is that if that 20% clients don't take any decision, then whatever Infi has guided 0 to 3%, I think that is a very decent guidance. You can't take risk of over guiding because historically it has happened few times when companies have ended up giving guidance and not meeting it. So I think in such uncertain times, definitely numbers are weaker than expectation. Guidance seems to be weaker, but I don't see any other choice with the large tech companies.
Also, Sandeep, with the recession fears or clouds hovering over U.S. economy, how do you think this will impact Infosys business going forward? The majority of clients are from America.
No, see, the problem is that, while initially people were thinking that, tech is defensive, but you have to remember that 80% of the tech business is only defensive number. Number two, you will have solutions for tariff. There will be negotiations. You can pass on some cost and everything. But what solution will you have for lower global economic growth? And when your business model is 90% exposed to export, and today the whole world's growth is being challenged. So not only U.S. clients, but, you see big corporates in U.S., they may be billing even in Europe, but their head offices are in U.S., their decisions are made in U.S. So I think that full 90-95% export revenue for all tech companies is under question. It is not only U.S. revenue which is under question. So I think it is a very, very connected world. I believe that, there will be impact going forward, and God forbid there is one or two large contract cancellation or delay, then, even this 0 to 3% can come under this. So, expecting anything more than this at current juncture in uncertain times will be too optimistic.
All right, thank you, Mr. Agarwal, for joining us this evening. And moving